Hello and welcome to this lecture video. That is a brief lecture video that covers the requirements of your Excel case on cost, volume, profit analysis. Okay, and so you'll want to watch all those Excel videos that I posted up on Canvas before you jump into looking at this case, because this case will require you to have some knowledge of Excel and how to do break even and cost, volume, profit analysis in Excel. And also how to do some basic pivot tables in Excel as well. Also how to do high-low and regression. So that's why I have all those other lecture videos already set up. So it'd be a good idea to watch those first before you jump into this, okay? So we look over here. The first file you want to get, and all these files are going to be posted up on Canvas. First of all, you want to get is this PDF file. And then there's another file called your intro and best practices. And then another file, your spreadsheet requirements and background version 2, and then another file on your income statement format right over here, okay? So this is the actual case, and this the PDF file that describes the case, and some of this kind of goes through and talks about, you know, how is the case received by other students in other classes and stuff. I don't think we really need to talk about that, but it does go through and talk about some learning objectives. I'll let you read that on your own time. And so kind of jumping down here, I have my own grading rubric, and I'm just kind of going through and trying to see if there's anything I really need to go over in this file. There are a couple different cases that you have to solve, basically. And so rather than going over this file, I'm going to let you look at this PDF on your own. I want to look at the spreadsheet requirements. Okay, so this really actually does a good job going over it. So it's the spreadsheet requirements and background version 2. So if you look over here, here's your business issue. It says, as the management accountant for Superior Log Cabins, you have been asked to attend a planning meeting for the 2012 season. The owner specifically wants to know how many log cabins must be sold to earn a profit of $300,000. The company makes 3 different models of cabins, a deluxe, a standard, and a basic. At the end of the year 2011, the local utility company began charging Superior as a mixed cost. So it has some fixed, some variable. In this case, it had an annual fee plus a variable cost for each kilowatt hour the power company uses, rather than solely at a fixed rate. Each cabin requires approximately 8,000 kilowatt hours of electricity. The company needs to add that new utility cost to the projected income statement. Okay. Cabins are constructed at 3 different locations, so the utility company will estimate costs separately for each model. The owner estimates that sales in 2012 will be 25 basic cabins, 35 deluxe cabins, and 55 standard cabins, and they will produce that amount exactly. The current selling price is $79,000 for basic, $112,000 for deluxe, $91,000 for standard, and will not increase. Assume that there are $150,000 of fixed admin costs and $5,500 of variable selling costs, no matter. So, and then the company uses job order costing, okay, and then some more data there about the assumptions in a table rather than a text form. So we'll take a look at that. So here's your additional data, table 1, the 2011 utility costs, and so you're going to use this utility costs to estimate the utilities cost for 2012. Okay, so that's going to be your first thing. So basically, if you look over here, this is your table 2, your estimated cost by model. So it says here's your direct materials for the basic, and then direct labor, and then manufacturing overhead. So this is the cost per unit for materials, for labor, and then here's the total number of units, gives you the total cost, right? So this is that times this, okay? And then we come over here and we have our fixed costs, and then we have our variable cost per unit. So what you need to do, the first thing that you need to do, if I jump down to the requirements down here, it does say to format, you know, give it your name, okay? And so then that way I can create it easier. And then the first part is to estimate the cost of utilities using the high-low, and then to estimate the cost of utilities using the regression. So you're going to come over here and do what we did using high-low and regression to figure out the variable cost per kilowatt hour and then the fixed cost, okay, for our utilities costs, okay? And then you're going to decide which one would be better to use. Would it be least squares or would it be high-low? Hopefully you choose least squares because it's a better option since it uses all data points. Okay, so then it says what you need to do is to copy table 2 to your own solution worksheet and then add the estimated 2012 utilities cost that you did in either 2 or 3. Choose one of the 2. I would recommend least squares. Okay, for each type of camper to the prediction of other manufacturing overhead costs in the data above. Indicate which method you're relying upon, and so the fixed cost will apply separately to each model. Okay, and then so if we look over here, so basically what Part 4A is asking you to do is saying update this right over here, this here, and this here, and this here, based upon the results from your regression or high-low analysis. So you're going to have to figure out the variable cost per unit, which is the kilowatt hours times the number of kilowatt hours, and then also add in the variable selling and admin costs of above, which was the $5,500, to get the total variable cost per unit. And you'll also want to update the fixed costs here with the fixed costs from the utilities costs that you figured out from the regression or high-low. Okay, so basically what you're trying to do with this task is to update this table, specifically the fixed and variable cost, to get a total cost right over here. Okay. If I click on the other other tab, we see the business issue data formatted right over here. This is just kind of showing you right over here. Here's the sales, the price, kilowatt hours per unit is 8,000 kilowatt hours per unit. Each one uses that same, and then here's their fixed admin, and then here's their fixed selling. And so you can use that data as well to help you update this table 2. And updating that table 2, again, is part 4A right over here. Okay. Part 4B says to convert the table in Part 4A into a pivot table, and so it says by displaying total cost as values, model is the columns, and components is the row. Okay. And then Part 5A is to prepare an income statement using absorption costing, and Part 6 is to prepare an income statement using variable costing. Okay, so you're going to want to make sure that you've watched the lecture video on Chapter 5, which covers full costing, also known as absorption costing, and variable costing. So that's what Chapter 5 covers. So in order to make this easier, what I've done is I've included, we look up here, this is called your income statement format.xlsx, and that is included up on Canvas under modules. Remember, everything is under modules. And what I've done is I've basically given you the format. Okay? So what you need to do is, this is your absorption costing income statement. You need to complete that with the appropriate data. And then this is your variable costing income statement, and you need to complete that with the appropriate data from your table 2 that you completed up here. So basically you need to complete those 2 income statements. And then the final part is to write a memo to me, and then what you want to do is choose 5 of the following 10 directed questions. Okay? So which cost estimation did you use? Did you use regression or high-low? Why? What effect would utilities have on cost estimation? Is it appropriate to estimate utilities costs for all 3 models using this data set? Why or why not? Why might it be different between high-low versus regression? What if the production of cabins changes to 25? If the company could manufacture, so you kind of get the gist. So you need to choose 5 of those 10 questions. I want to come back up here to Part 6A. Because it does say in Part 6A, remember, to prepare the income statement using the variable costing approach. The other thing is, if we look at Part 6A, actually, it says to use cost volume profit analysis. Determine the total number of units that need to be sold to earn a target profit of $300,000. So this is another I kind of skipped over this when I initially went over it, but you will need to conduct a target profit analysis to tell me how many units you're going to need to sell in order to earn a target profit of $300,000. And so if I look down here, what I also want you to do, as I'm looking at this business issue data formatted, is I want you to tell me how many units in total need to earn that target profit of $300,000, and then of the total number of units, right? How many would be basic, how many deluxe, and how many would be standard. Okay, so you need to break it up. So this is going to be a weighted, you're going to have to calculate the weighted average contribution margin per unit and divide that into the total fixed costs. And then separate it out, how much goes to basic, deluxe, and standard based upon the sales mix, just like we did in some of the Chapter 4 notes, okay, when we went over multi-product break-even analysis, all right? If we look over here, I just want to make sure you kind of, maybe I'll give you a quick check for just looking at the solution right over here. This is some of the data that you should get to. If we look over here, I'm just going to give you, to make sure that you can get to this. So you can see I've updated the fixed costs over here. Here's the variable cost per unit. Now you can see that I'm giving you the data. This is the solution, but I'm not showing you the formulas on how to get to there. So I am giving you the quick check, okay? So to make it easier for you. All right, so that's that right there. That covers basically the case. And let me come back over. That basically covers the case. And I've told you the values that you need to get to, but I'm going to be checking over your formulas to make sure you got to the appropriate formulas, okay? And so you can't just type in the values into the spreadsheet and expect to get full credit. You need to show me the correct formulas, but I did give you the quick check figures to make sure that you're on the right track. Okay? This concludes this lecture video. Thank you.